Hi, so to finish off my update videos for Q2, I finally got all the information from the last of the companies that I've been watching. So today I'm going to provide an update on Berkshire Hathaway, Middleby, Tencent and Alibaba. So let's go see what has happened and see whether my buy prices for each of these companies has changed dramatically. Now just remember, the reality of investing is that 90% of investors, well, they lose money. And I think it's because they're not fully understanding what it is they're actually putting their money into when they're investing in the stock market. And I also think if investors just held a longer term view, well, we would dramatically reduce that 90% failure rate. Anyway, my goal is to help as many people as possible actually understand what it is they're investing in. Because at the end of the day, most people make their investment decisions a lot faster than they would, say, researching their next holiday destination. So in order to make sure we're still understanding what we're investing in, we do need to keep updated on when the company released their earnings. So let's start with Berkshire Hathaway. So Berkshire Hathaway in the quarter repurchased $5.1 billion in their own shares. Earnings per share for Berkshire Hathaway came in at $10.88, and there was no significant changes to their major holdings. Now, we often forget that Berkshire Hathaway is actually a really large insurance company. And what they do, they're one of the underwriters for lots of other insurance companies. It's a great business model and it makes Berkshire Hathaway amazingly stable. If you want to know a little bit more about insurance companies, I'm putting together a 3-part series of investing into insurance companies and how that all works. Okay, now back to Berkshire Hathaway. Now, each quarter they release a document called a 13F. Now, this is important because it's a document that shows everything that was bought and sold throughout the quarter. So we can see exactly what Warren Buffett, Charlie Munger, and Berkshire Hathaway have been buying and selling through the quarter and what changes they've made. And the media, well, they have a frenzy when Berkshire Hathaway releases this 13F document and talk about all the different changes that were made. For example, Berkshire Hathaway made an investment in a company called BRK.B, and already within, say, 2 days, there was already hundreds of articles written about it. So with this 13F document, it's really easy to get caught up in all the news articles that get posted immediately after it comes out. But we need to take a step back and look at the bigger picture. Because what Berkshire Hathaway actually is, well, they're just a stable, gigantic investment company that has been one of the best performing companies in the world pretty much of all time. It also has some of the best financial managers running this company like Warren Buffett and Charlie Munger. So I think the big news here that is not getting the attention it deserves is the share repurchases. This means that Warren Buffett and his Berkshire Hathaway team have decided that, well, Berkshire Hathaway is one of the best investments that they can put their money into. And this is great news for the current shareholders because the value of your shares, well, they've improved because there's just far less of the shares out there. And Berkshire Hathaway, well, I still think is one of the first investments that I would make if I was starting a brand new portfolio. Based on the good results, I've slightly adjusted my buy up to price of $205. It was $196. And I have a target price on Berkshire Hathaway of $385. Now we're going to have a look at Middleby. And for those of you who don't know, well, Middleby is a commercial kitchen equipment manufacturer. And if you want a little bit more information about this, I've made a video around about 2 months ago going deep into this company. And in that video, I also explained my thesis on why I'm going to be an investor for the long term. Now, the earnings per share came in at 55 cents and the analysts were expecting it to be 41 cents. Revenue was $472 million and the analysts expected a little less than that at $445 million. But I think the big stat here is the earnings per share and the revenue were down significantly year on year. So this is a massive, but it was an expected drop. So these results, well, they were bad, but they just weren't as bad as expected. And because the analysts thought it was going to be worse, well, the share price, it jumped up significantly, about 12%. And honestly, this really doesn't make any sense because they're making nowhere near as much money as they were this time last year. Now, for those of you who did watch my previous video on Middleby, a big reason I invested in this company was the thesis that when they do hit tough times, they are really strong financially, so they should be able to weather that storm. And times don't get much worse for the restaurant industry than Q2 2020. Timothy Fitzgerald, the CEO, had this to say: "We were pleased to have maintained very strong levels of profitability across all 3 business segments, despite the sharp decline in revenues. We will carry our financial discipline and our profitability initiatives into the future quarters as we see business levels improve off what we believe is the trough of the second quarter." Now, I haven't changed my buy price of $57 with a new target price of around about $130. And I think we might see this $130 sometime when the world recovers in the next few years. And the reason I'm confident it'll get to this price is because it's a really well managed company and it's a profitable company. So I'm still a long-term holder unless the price goes far past my $130 price target. So for Tencent, they had a 37% year-on-year increase in shareholder profit and a 29% year-on-year increase in their revenue. Now, I like Tencent a lot, and they have reported fantastic Q2 results. And if you are interested in finding out more about Tencent, like all these companies today, I have more detailed videos that I have made in the past, so go check those out. And like their American tech counterparts like Facebook and Apple, well, Tencent showed that the current strange market conditions are really favorable for big tech. Also, online gaming grew about 40% for Tencent. Now that's a huge increase, but I guess it was expected considering a lot more people were staying at home and not working a lot during Q2. So I think we'll see this come back down a little bit over the next few quarters as sort of normality resumes in the world. And also WeChat Pay, well, it had grown 30%, which is also a fantastic result. Now, you're probably seeing a lot of news out of the US where, well, the American government isn't very comfortable with a lot of their companies advertising on WeChat and Alibaba's platforms. But the US market actually only makes up about 2% of Tencent's business. So it's really not that big of a deal. So if the share price tumbles because of this issue, well, hopefully that actually brings about some sort of buying opportunity for us. Because I can tell you now, it's really not that big of a problem if the US companies don't advertise on WeChat. Now, I've increased my buy price to 300 Hong Kong dollars for Tencent, and that's up from 277 Hong Kong dollars. Still, it's far away from the current share price, so just something to keep an eye on. By the way, the current share price in late August is about 500 Hong Kong dollars, and that's pretty much fair value too. Now let's go take a look at the other Chinese tech giant, and that's Alibaba. Now for Alibaba, the earnings per share came in at 14.82 Chinese yuan, and that's up 18% year on year. This comfortably beat what the analysts were predicting of 13.82 Chinese yuan. Revenue for Alibaba came in at a little over 153 billion Chinese yuan, and that's up 34% year on year. Again, beating the analysts who thought it was going to be 148 billion. And following on from the big numbers from Amazon, Facebook, and Apple, Alibaba saw big increases across the entire company. The CEO, Daniel Zhang, had this to say: Alibaba delivered excellent results this past quarter. We were well positioned to capture growth from the ongoing digital transformation, which has been accelerated by the pandemic in both consumption and enterprise operations. Now, like Amazon, Alibaba saw strong growth in its e-commerce side of its business across pretty much every region. And what I think is going to happen, in my opinion, is a lot more people all over the world in all these different countries have just got a little bit more used to, more comfortable with doing their online shopping. So whether that's the old Chinese lady sitting in her little apartment in Beijing or Shanghai or wherever she is, who was very resistant to going online, well, she's been forced to try it and now she might do it again and again. So I think the growth of both Alibaba and Amazon, for example, well, I think that's actually been accelerated by this crisis and I think it's here to stay. And overall, I'm just really impressed with Alibaba. For a really big company to be growing at the speed that they're growing at, they're really just not doing anything wrong. But of course, this sounds too optimistic and I think that the growth definitely can't last forever. Because you've got to think of this practically here, because all fast-growing companies all mature at some point. And I don't know how long that will take, but I have to factor that in when I'm doing my intrinsic value calculations. Previously, I had a buy price of $145, and now I've improved that because of the earnings report to $175. Now, this is the price that I'll be waiting for, but as many of you know, the price is closer to $260. So this isn't looking likely anytime soon. And I get a lot of people saying that I'm too conservative and that this price will never happen. And I understand these comments a lot, but strange things do happen in the marketplace. And earlier this year was a prime example of a strange stock market event happening. So I think a fair price target for Alibaba is $330. Now, I hope you've enjoyed this update, and remember, be patient and let the prices come to you. Now, all of the updates that I've done over the past couple of weeks, I'll be doing them again after the Q3 earnings reports. So please subscribe to my channel so you don't miss out on any of these updates in the companies that you might be invested in. And don't forget to leave a comment if you have any questions at all, and I will see you in the next video.